Well, it is a new year, so it's a pretty good time to get your finances in order, because there's never a bad time. We've got Paul Schatz back. He is the president of Heritage Capital with some tips, plus looking forward a little bit as to what we can expect when Donald Trump gets sworn in as our 45th president next week. A pleasure to see you again. Thank you for being back.
Good to see you, my friend.
I know we always love talking finances with you because there's so much to learn. And there's so much, I guess, uncertainty going forward, not necessarily in a bad way, but what can we expect now as Trump takes office?
Well, first, you can expect a lot on Twitter.
Yes.
He hasn't had a press conference, I don't think, since July, and it doesn't seem like there's going to be one anytime soon. The big uncertainty now is he's not conforming to the norm. So we have a president-elect who has no problem going on Twitter and calling out Ford and GM on building cars outside the United States.
Yeah.
Once he tweets, those stocks immediately go down or immediately react. So we have some uncertainty, some time-sensitive things that we never had before. Mm-hmm. Interesting, he had talked during the election about repeal and placing Obamacare. That was a huge thing. So the GOP, the Paul Ryan, they're lined up. Trump now has really kind of walked that back a little bit. He almost wants us to let Obamacare fall a little more, create a little more crisis and controversy before maybe coming in. So now you have a little bit of a divide between he's a Republican and the Republican Congress. I think that's going to continue. I firmly believe next 2 years he and Putin are going to have a fight.
Yeah.
I would not be surprised to see Donald Trump and Chuck Schumer, who's the minority leader of the Senate, actually become buddies again. And at 18, mid 18. Trump is a wild card, and the markets and the economy have to realize that.
I've heard a general truism is that markets don't like uncertainty so much. I mean, is that the case here? Because then, on the other hand, before the election, you were saying, well, we're expecting the market to go up either way, just anticipatory.
Markets don't like economic and let's call it earnings-driven geopolitical. We've never had this kind of uncertainty. Okay. So there's no playbook. Right. Where the market is, I don't want to say flying blind, but certainly trailblazing right now.
What do you think about taxes, say, by the end of this year?
I think that's the one they're going to attack in Q2, Q3. I feel very strongly that the GOP and Trump will come together. I don't think people making $1 million, contrary to what Trump said during the campaign, the $1 million earners or more will not get an immediate tax break. I think they're really going to focus on, one, corporations, knock that tax from 35%, among the highest in the world, down to Trump wants 15, Congress wants 20. I would probably say 20s or Congress will win on that. And that's going to be huge for corporations. Middle-class tax cut is going to be right up there, number 1A. So I think people watching the show now, for the most part, your taxes are going to go down in 2017, retroactive to January 1. Big plus, along with capital gains taxes.
How about the investing theme as a whole? Is it going to change now from the last 8 years of Obama?
I think the investment theme has and will continue to change dramatically. The biggest sea change on the investing landscape probably since Reagan. And part of it, Trump, it's just inherited. Interest rates have gone down for 35 straight years. On balance, rates have gone down. Yeah. And it's not necessarily the rate that you see the Fed setting, but it's long-term rates. It's your mortgage rates. So I think
lag a little bit.
So the rates that your mortgage company gives you for the long-term rates are set on the 10-year Treasury note. That's a longer-term interest rate. Not the Fed sets rates on the overnight stuff, the prime rate. So I think rates in the next 30 years probably go up mildly. That's one. And also, we haven't had inflation really since 2006. And I think the Trump presidency is going to see inflation not getting to worrisome levels, but it's been under 2 for years and years and years. Inflation is now going to start creeping up over 2, probably towards 3%.
Okay, it's just something that's bound to happen eventually, and that now is when you think
these are long-term cycles that, whether it was Hillary or Trump, this stuff was going to happen.
Yeah. Okay. What about the Dow? We're just still, like the last time we were here, creeping right at 20,000. Does that give us a margin for error?
To me, the market is priced for almost absolute perfection. There's very, very little margin for error.
Okay.
Dow 20,000 is just a round number. The media, as you know, makes a huge deal over big round numbers.
Right.
So my view, it's a fait accompli. The market's going to hit 20,000, whether it's on Tuesday or on Wednesday or on Thursday or in February. It's going to happen. I've talked about it since 2010. I feel strongly it's going to happen, and I think we're still going to go much higher over the long term. But I think there's no margin for error here. The slightest little slip, if Congress stalls on some of these initiatives, markets will not like that at all.
Okay. Well, unfortunately, we don't have all the answers for you, and there was a lot more, of course, we can get to. Let's get you back here again because we could talk about this a lot.
Thank you.
Paul, thank you so much.
Thanks a lot.
A pleasure.